The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live for TFNN. Thanks so much for tuning in, starting your day. It's 9:06 a.m. We got 24 minutes to go until the start of trading, and we got markets. Where are they, folks? They're in positive territory. I know, remarkable. You wouldn't think it, but it's happening every day. I kid, but this S&P, it is relentless. As I put it to a friend yesterday, quite a turnaround from the run we had on Friday. You had Chairman Powell in front of House Select Committee yesterday talking about the pandemic, the Fed's response, saying it was very, very unlikely, were his words. Two verys, very, very unlikely that we'll see 70s style inflation. He's talking about transitory nature. We've heard the argument before. That's the Fed chairman's position. The market loved that chairman's position. And nonetheless, we charge higher continue in the run that we had on Monday. Monday, you had a couple Fed governors out there talking about that not quite as soon, the tapering conversation maybe as everybody had anticipated. But, man, you look at where we are, folks. You're talking about 41.26 this week. That's Sunday night at about 10:30 p.m. Eastern time. The S&P's adding about 115 points from that price level. You're talking about almost 3% that we are above where we were Sunday evening in the S&P's. NASDAQ 100 making all-time highs within the overnight session. You back it up in terms of the NASDAQ 100, you put it on a daily, and you see the trend line that we began basically from that run on November 1st. We put it on a trend channel line. We've taken off, really, even since May 19th. You were at 13,000. We're at 14,270. You're pushing almost 10% higher on some of those tech stocks. We had Microsoft shares yesterday joining the $2 trillion market capitalization club. Only Apple in that class by itself until yesterday. Microsoft joining the ranks, $2 trillion. And today they're going to add to that. They're trading at 266.24 right now. They closed yesterday at 265.51. I mean, look at this acceleration in Microsoft, right? Microsoft up a solid 10% from the lows that we had on May 19th. Huge turnaround. We'll talk about Apple. Apple shares, $133.98 yesterday. They're going to open barely higher this morning at $134.05. Apple still above $11 from the all-time highs of $145.09. Google's been in the press recently with antitrust concerns. Doesn't seem to be bothering investors. You want to talk about an uptrend channel. Check out this channel line on Google, straight to the upside and straight from $1,400 back in September. I say back in September. It's already June. You're talking about 9 months. But you're talking about trading up $1,100 and a $1,400 equity over that time. My goodness, right? That's pushing almost 70% returns, let alone you back it up from where we were in March. You're talking about adding $539 since that time. Substantial returns on Google as it just continues higher. YouTube is just a content juggernaut in its own right. Advertising playing out in a big way. I find myself, TFNN, if you're watching the TFNN live stream right now, we stream that on YouTube, even within our own website, let alone just getting lost in the rabbit hole of YouTube videos, content creators, etc., the number of ads that you do end up watching on that platform. All right, we got to talk about Bitcoin, of course, making all the headlines yesterday. We got a 100% retracement from the move that we had in Bitcoin starting on January 28th. You make it up to 65,520 the day that Coinbase goes public. Credit to the market, pushing out those Coinbase shares at a Bitcoin high of 65,520. Be really interesting to know what was going on in that crypto sector. Crypto, completely unregulated, right? Not as big of a market as some of the markets that we trade in terms of equities, especially notes, bonds, etc. A lot of people interested in keeping that up as they pushed out Coinbase, and boy, they kept it up well. It's a 65,000 on the day Coinbase goes public. You trade yesterday to 28,800. And just like that, folks, we're talking about $5,500 off of that low. You see why people love trading Bitcoin. They were trading it yesterday in the den. Kudos to Ruby. Had some good trades in there, I saw, catching a little bit of the low, around 29,000. But, man, we'll see where we go. You see the move we've had. It's been a one-way shot. And even with a move of $5,500 off the low, that barely looks like a bounce. You put this thing just going back on a 20-day hourly, right, to see the run we had. Let's take off this Fibonacci number here, and let's see how far we've bounced now. Just above a 382 retracement, 50% retracement on that move would be about 35,000. You make it all the way up to a 618, you're talking 36,574 in Bitcoin. Crude continuing to run. Remarkable action in crude. It's not slowing down anytime soon. Talking to Kevin Hinks yesterday. We're going to be talking to him coming up after the break. Made a great point. You know, it's talking about supply as well in this conversation, and crude just keeps climbing higher. Our man Teddy Kegstat, we'll be talking to him from forex-trading-unlock.com at 40 past the hour. Teddy had a great call, $100 oil a while back. Looks like it's on its way, folks. We're pushing highs, 73.60 this morning on the price of crude. Gold contract still hanging somewhat near the lows. Gold with a 618 retracement of the move that it began on March 30th, give or take. You trade from 1675 to 1920. Gold on a 15-minute basis, quite the escalation last week from Fed Day. You trade from 1866 down to 1770. Basically just been shopping around that level on gold. You put gold, as I mentioned, though, on that daily, you're talking about a 618. Also correlating, always nice when you can go back to an area on a chart that matches up in terms of an area of support. This 618, a 17, call it 1768, maybe call it 1775. This area, nice area for support, going back to where it was in April to early May before it took off to the upside. You've pulled back to that area. Maybe gold finds a little bit of support here as well at 1775. Gold pulling back pretty substantially from that 1920 price point. Remarkable that you talk about. That was June. We were trading 1920 gold this month, June 1st. Whew. And notes and bonds. You want to talk about some moves? We got the 10-year just kind of hanging out where we are. Now, the remarkable thing here is that we have gotten so much volatility in the 10-year that you can barely see. I'm going to zoom in just on this consolidation, okay? The move we got a couple days ago, folks, just remarkable. You had the yield on the 10-year, okay, when this spiked up to 132.31. Okay, we're talking about Monday. This isn't a long time ago. You got a spike up to 132.30, I believe is the high. What's the high? 132.30. There it is. By the end of the session, you closed it out at 132.05, but you actually made a low 132. You traded 30 ticks. You had the yield. When it was up to 132.31, it was pushing about 1.35%, end of the day at 1.5%. Crazy action in the 10-year. You put it on a 3-year weekly, okay, man, quite a run we've had from 117 to 140.24. That's when we're dealing with rates at about 0.5%, pushing the zero boundary line for interest rates. We've now pulled back. You're talking about a 382. And just as I talked about on the last chart where we were looking at gold, okay, we've now found a bit of support in this area, which correlates to the area that we had resistance, right? You back it up to September 2019. That area was resistance. We had a nice retracement. We really take off. Call it the beginning of 2020. Things are really getting out of control as COVID took hold up to 140.24. But this area looking to be a bit of a support. And you see it on a weekly, couple nice bars bouncing from the lows we had there on a weekly basis on the 10-year. We're talking about 1.48% this morning for the yield on the 10-year. And you got to pay attention to the VIX, folks. It's telling you signals, and it's telling you lower lows and lower highs. The low of 15.15, you're talking about that low last week, 2 weeks ago, excuse me. Now we're looking at a weekly, but man, look at it, right? You go back to June of last year, we're talking about a year ago, 44.44. And then we're talking about 38.28. We're talking about 31.46. And then, since you're talking about January, lower highs, lower lows in this market as the S&P and the NASDAQ 100 reach all-time highs across the board. Stay tuned, folks. We come back right after the break with our man Kevin Hinks. We talking markets, we talking options.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P futures up by 4 points right now. NASDAQ 100. You're talking about positive by 6 points. We made a new all-time high overnight. Quite the acceleration of those tech stocks. We get the Dow up about 60 points this morning. Let's jump over to our man, Kevin Hinks. Every trading day, folks, 11 a.m. Eastern time. Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey and the team breaking down the market action, talking about hypothetical trades, walking you through how to set those up, trade management, rolling, the whole deal. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Happy Wednesday. This is kind of the quiet before the storm in some ways, because we get a little more significant economic data coming up Thursday and Friday. But pretty hesitant start to the trading day. None of the indices really jumping here. A little bit of a relief rally in Bitcoin after it got down to, below 2,900. So I think that's fairly significant. Besides that, we're kind of waiting for some real economic data, and the income and outlays number on Friday will give us another good look at inflation, Tommy.
Kevin, I got to ask you to say, I talk about Bitcoin all the time. You can't help but talk about it. They're talking about it in the Tiger's Den over here, of course, because the volatility you're getting is amazing for traders. Really remarkable, in my opinion, that the high on Bitcoin, 65,520, of course, the day that Coinbase goes public, Kevin, they really had that market flying. Now, Coinbase, you're talking about this morning, you're up about $4, but this thing pushed 429 on April 14th. Is that something you ever look at? I talk about anecdotally, but pretty coincidental of coincidental, not really coincidental, right? You have the biggest exchange out there in crypto. They get Bitcoin all the way up to 65,000 the day it goes public. And really, what a short opportunity. Sometimes, you buy the rumor, you sell the news, right? You buy it up until Coinbase goes public. Hindsight, of course, always 2020, but really interesting action when you look back to April 14th with the type of action you got on Bitcoin with Coinbase going public that day, considering what's happened after the fact a little bit.
Yeah, I watch the cryptocurrencies only because I want to see if they have any effect on the things that I do trade. I don't trade cryptocurrencies. I only trade things that I can derive the value of, and I don't know how to do that. I've tried. I've looked into it. So that is purely a momentum trade, and I'm sure some people know more about it than I do, but I really like to trade the things that I can understand and look at. And even sometimes those confuse me. So I can get confused many ways without venturing into something that I really have no knowledge of. So I watch it in terms of its effect on the overall market, but trade it, no, sir.
Well, if you figure it out, Kevin, you give us a call, because I want to be the first to know, man, because I struggle as well. I use the term arbitrary in terms of arbitrary price levels. What's the difference? Bitcoin's trading at 35,000, is trading at 55,000, is trading at 25,000. It might have a vast future, but what is the difference there? I agree on that regard. We'll get back to the real market, man. Chairman Powell yesterday, pretty strong words. Very, very unlikely was how he put it, talking about 70-style inflation creeping in. That, of course, putting a little bit of a lift in the markets. Really can't be stronger there. Inflation, that conversation is going to persist. But this market, like you said, I don't know. We have a VIX, Kevin, of course, talking about options, talking about volatility. I bring it up often in my show. I mean, the VIX seems to be saying that there is very little volatility priced into this market, as fear, not really an element, as we kind of creep to all-time highs almost across the board. Dow a little bit of a laggard, maybe the Russell, but man, the S&P, the NASDAQ, and of course Microsoft yesterday joining the $2 trillion market capitalization. What do you see when you see a VIX like this creeping back down to 16 levels as we're in summer trading? We get the S&P pushing all-time highs, and like you said, a little light on data here, and we got a Fed chief that can't be stronger with the way he's talking about what they're going to be doing, in my opinion.
Yeah, maybe this is just, that I've been in this business a long time, but I really, when I think of summer and implied volatility like the VIX, I think of it needs big inertia for it to stay stable or rise. And without that, the basic gravity of volatility going lower is very heavy. Now, one event or one data point or one news headline can change that in a heartbeat, but without that, the trend for VIX is lower until something changes it, and without notice. So that's kind of what you deal with in the summer in terms of implied volatility. So yeah, I always am cognizant of where we are on the calendar, especially in the summer when it comes to the VIX and implied vol in general, Tommy.
And as we've talked about earlier in the week, we're kind of nearing the end of earnings season. I learned from you, man. Nike, FedEx, maybe. We get them both after the bell tomorrow. In terms of wrapping things up, we're coming into the end of the quarter. We'll do it all again, starting in July. What are you guys going to be talking about coming up on the program, Kevin, at 11 o'clock today?
Today we're going to have some fun. We're talking cruise lines. Carnival Cruise and Royal Caribbean Cruise that we're looking at today. So like Foley will do a presentation, we'll look at them and trade them today, but we're going to have some fun with the cruise ships.
Oh, that's going to be good, man. I love trying to break this down in my own head, even the cruise ships. I got Carnival up here, $28.06. You were trading at $50, right? Coming into COVID somewhat. Really, it collapsed to $7. RCL, Royal, you're trading at $85.66. You were at $135. A tough go-around for these companies, but I look forward to the conversation, Kevin. The airlines have gotten almost it all back, right? Cruise ships, not even close, man. They got some ways to go for obvious reasons. Well, Kevin, we look forward to the program, man. We always appreciate the education, and we'll be tuning in today at 11 o'clock for Fast Market. You have a great day, man.
Thanks for having me on, Tommy. Have a great day.
My pleasure. You too, man. Folks, tune in. Great program. They're going to break it down 11 o'clock Fast Market. I check it out every day. I learn something new usually every day watching that program. Outstanding program from Kevin, Alex, and the whole team at TD Ameritrade Network. All right, checking back to the markets here. We got about 5 minutes to go until the opening bell, and we'll check back to the S&Ps. Like we talked about, pretty tame market, no real action in terms of today. When you think about what we have in terms of last week was Fed week, right? We got Chairman Powell yesterday. Couldn't be stronger in terms of his words that he's using, talking about comparing it to his analysis of potentially 70s-style inflation. A lot of Republicans pressing him in the conversation and questions yesterday in front of the House. And he was saying, I just don't see it. Very, very unlikely when you talk about the services, the goods, the type of, an extraordinary time, basically, like nothing else, where you have supply side shock, you have demand side really accelerating when you talk about travel, airlines, used cars, etc. always gets thrown around. But we're going to find out, folks, if that's the reality in the next 3 to 6 months, because it can only persist for so long until transitory is no longer transitory, right? You're talking about maybe a year, not the end of the world in the Fed's opinion. If you're talking about maybe 2 years, not the end of the world, as long as they know it's coming back. But at some point, there's going to be, if it's not transitory, there'll be numbers in there that they just can't deny, may cause them to pull back some of that stimulus, and that's when the market may freak out. In my opinion, the risk is not that we regain the jobs, unfortunately, and the Fed says, okay, we're back to full employment, because their mandate is full employment and stable prices. So if you're looking at which one's going to cause problems and cause the Fed to pull back, it's not going to be because they've gained 8 million jobs by tomorrow or next month. It's going to be potentially because the nature of the rising prices is something that might become not transitory. My dad's making great points on his programs yesterday, saying it takes a lot to pull back on those prices. Once you have the ability to raise prices, folks, it takes a lot to pull them back. An ode to our man, Ed Young, man. He used to talk about those oil prices, say, man, when they raise those pump prices, they get out there and they change it instantly. But bringing them down, they might take a little bit longer to make it to that price level. We'll be right back, folks.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
Tom O'Brien has just published his 1,000th gold report. It's amazing to think that Tom has been writing his weekly gold report for almost 20 years. To celebrate the 1,000th issue of Tom O'Brien's Gold Report, we've just launched a Tiger Dollar sale which runs for 2 weeks only through July 4th weekend. We've doubled all the Tiger Dollar bonuses where you can now get up to a 40% bonus on your purchase. But that's not all. Inflation is here and the price of the gold report is going up after July 4th. Right now, you can lock in the gold report at the current pricing of $97 a month for as long as you remain a subscriber. This deal won't come around again. Get your Tiger Dollars today and apply them to the gold report before the price goes up on July 5th. Tiger Dollars never expire and are good for any TFNN newsletter or service as a great way to add savings. Head on over to the front page of TFNN.com for all the details and help us celebrate Tom O'Brien's 1,000th gold report.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps positive by about 3 points right now, trading at 42.39, pretty much right where we were pre-market. You jump over to Southwest. So Southwest, their CEO, he's going to be stepping down in 2022. Always interesting to see a little bit of volatility on that flash news. Jump over. So the headline is Southwest CEO Gary Kelly. He's going to step down in 2022 and replaced by company exec Robert Jordan, 2022, right? You're talking about at least 6 months away. Always interesting when you get that type of a quick reaction. Who was the one that was down there selling at a price point of 54.67 on that news? Nonetheless, you're basically back to almost unchanged on Southwest. All right, jumping around to what else we got going on. I got to bring up, market just opened. We'll get back into the equities, but I got to bring up crypto and Dogecoin, okay? So here's a chart of Doge. We got Doge just since overnight. You're trading up from 20 cents to almost 24. Do not trade Doge, please, folks. All right? This is a lesson in why not to trade Doge. You back it up to a week ago. You traded from 31 cents down to, what's our low there? 18? Yeah, 17.50 or so. Now, you see why people love trading it, folks. You just traded from 17 to 24. Okay, you're talking about, what is that, a 40% rise if you're able to catch the bottom there? All right, but the bummer of this is, okay, so I remember these stories about this gentleman, okay? Now, CNBC, they love the clickbait, okay? They're the king of it. And they had a story out there talking about this 33-year-old Dogecoin investor became a millionaire. This guy is like their go-to guy of Doge millionaire-esque escapades, we'll call it. The bummer of it is that this gentleman, I believe he took out a loan. All right, he invested over $250,000 in Dogecoin on February 5th. Now I'm clicking this one because I believe that he took out a loan on this. All right, I'll do some more work at the break, but nonetheless, the bummer it is he takes $250,000 nonetheless, puts it into Doge on February 5th when it's trading about 5 pennies. He gets it up to $2 million. Okay, where is it? There it is. Surpassed $2 million. Now, again, this is what I say. CNBC loves this stuff. They're doing a disservice. You think CNBC, I pull up their articles because they have some headlines of news events, but they are doing a tremendous disservice spreading this stuff all over the internet. The Dogecoin millionaire refuses to sell and bought during the dip. Now his stash is worth $2 million. Sounds about as rosy as can be. Well, guess what, folks? You know what he's sitting at right now? He's sitting at 831. He's lost $1.17 million. This gentleman has lost. Now, remember, he put $250,000 into this. Okay? So he's now up less than $600,000. He's lost $1.17 million. Now, that was as of yesterday. So this gentleman has had quite a nice run if he still held it. Point being, folks, it's going to be a real bummer if this guy gambles $250,000, actually hits it big, has $2 million and decides to not sell and lose it all in Doge. But guess what? It's probably happening everywhere to bigger and smaller degrees across the board. But remarkable, the terms of the volatility that you see happening, as Kevin put it best, I cannot judge what's the difference between Doge being worth 24 cents and 15 cents. Somebody tell me if you do, kudos to you, but I can't put it in my own head. All right. And you can trade the momentum, you can trade the technicals in a big way, but boy, you better have quick fingers and you better not be putting down $250,000 if that's all the money you have, running it up to $2 million and saying you're never going to sell. Sad story out there for sure. All right, jumping around to other stories out there. We got the market sitting at all-time highs. Just a little reminder, folks. We should have gotten the reminder that we all needed in terms of last year, that anything can happen in the market. You always want to be diversified. You always want to be aware that there's risks out there that are very hard to quantify. War is one of those risks. Thankfully, in my lifetime, we haven't had anything like a world war or something like that, right? We have troops all over the world, unfortunately, and thankfully we get to live in the great country we do because they're out there protecting our freedoms across the board. But, my generation, in terms of, I'm in my young 40s right now, not exactly young, but in my 40s, really doesn't know a World War type environment that just could decimate a market, right? We saw the type of decimation when COVID hit and businesses had to shut down. Last thing you want to see is war broke out, and Russia, they're always a wild card, folks. There's plenty of wild cards across the world. And this morning, you have the story breaking on Bloomberg across probably the globe that Russia fires a warning shot at British warships. This is just after Biden and Putin met. Putin is quite a character, as we all know. A fighter dropped bombs near a destroyer. Defense minister says Russia accuses British vessel of violating its sea border. No real reaction here. But it is just always a reminder when I see these things that we all think things are unimaginable and are not possible until they become possible, right? I mean, there's no real threat to dramatic war right now for the U.S., yet it always exists in some capacity. And it doesn't mean that we're going to break out in a war, but that is a risk. A pandemic is a risk. You have the market, okay, basically priced for almost perfection right now, which is remarkable considering what's going on. Now, you're priced for perfection because they're priced for perfection in a world where the Fed is going to be there to prop them up when they need it. I want to put that back on a daily. But you just have to consider that this is priced on many future earnings, especially the NASDAQ 100, right? You're not buying earnings that they have this year. Okay, you're buying tech stocks that are accelerating higher and have some dramatic earnings in the years to come, even when you talk about the likes of the big dogs out there. Just something to consider, folks. When you see those types of stories out there, remember to protect yourself, because the market, and listen, I think this market's going higher, okay? I do. There's nothing to say it's not right now. The Fed was out there being as strong as he could yesterday. But just keep it in mind, because it doesn't go up forever. And the run that we're having is extraordinary, okay? Extraordinary on money, many, many multiples. You back things up on a 5-year weekly in the S&Ps, all right? We got 1981 on this chart. You make it back down to a price level of 2174. But, geez, I mean, you just back things up. We were trading at 2,900. It's September of 2018. Now that's saying if you bought the high before things really cascaded to that Christmas Eve sell-off that we had, et cetera, down there at the end of 2018. But if you bought the high before that sell-off, you're still up 1,300 points in the S&P over a period of under 3 years. Okay, and what is that? That's 40+% over a period of 3 years, and that's not including that you would have been up 33% from the low just on this chart going back to June. Extraordinary returns, folks. Extraordinary. And when you tie in the Fed priced into everything, there is going to be volatility to the downside that comes back in this market eventually. Okay? Long term, I think it's super healthy. Short term, it would make sense that we have some volatility coming. Maybe it's after the summer. Maybe it's at the time that we come into the fall. Maybe jobs aren't back to where we thought they are. Maybe inflation's persisting a little bit higher than at least the Fed chair is talking about. But those risks exist. You know, if you're in an environment that you're not diversified, you know, it just might be time, folks, because inflation's here. The market is at all-time highs across the board. It's priced for perfection, but we're still missing about 8 million jobs in this market. And they're not going to get made up overnight. They're not going to get made up, unfortunately, as quick as we all thought they may, when we're not seeing those types of job numbers and the non-farm payroll numbers just yet. Microsoft, we're up 0.2%. You jump over to the Analyze tab and pull up the fundamentals. So Microsoft, $2 trillion, they're in the club. You're talking about a company, I believe it's 7.5 billion shares. Yes, 7.5 billion shares. So every dollar that this goes up, you're adding $7.5 billion to the market cap. I think Apple, what are they pushing? Pretty remarkable when you talk about Apple. Pretty similar, 16 billion. 16 billion. Yeah, because Apple's trading 133. You got Microsoft trading at 265. Stay tuned, folks. We're going to come right back. We'll be talking Forex with our man Teddy Kegstad from Forex-Trading-Unlock.com. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in positive territory. Let's jump over to our man, Teddy Kegstad, folks. Every trading day, you can reach Teddy at forex-trading-unlock.com. Teddy joins us every Wednesday at 40 past the hour. Teddy Kegstad, good morning.
Good morning. Boy, do we have a lot of stuff to talk about what's happened since we talked last, huh?
It's been quite a week, man. It has. What are we came into Fed Day, of course, last Wednesday. When you think about what's been happening since then, we've had some action across the board for sure.
Sure. Well, the dollar exploded to the upside since we talked last week, and then ended on a high note on Friday. But then we had a whole bunch of signals when it comes to the dollar index, multiple currencies, gold, you name it. So I'm ready to unleash all these for you if you're ready.
Perfect. Where are we going to start unleashing it, man?
Okay, we're going to start with the dollar index. On Monday, it had a bearish engulfing line sell signal. So now I would be very leery being a long-term bear with the dollar right now because there's some funky things going on, and I'll make it all sense as I go through these price targets. But short run, I think the index is looking to correct down to about 90.95, 90.61, somewhere in that band. And if you're looking at the euro and the pound, which are the two biggest hitters in the dollar index, they're rallying right now in a big way. So with the price targets I have for these two markets, that alone should put the index into that area. So without worrying about even the other currencies. So on Monday, we had signals across the board. So besides the dollar index, we had a bullish engulfing line in the euro US dollar, which is now targeted up to $1.2057, maybe even up to about $1.2120. Now this is just if the current wave is a correction. Okay, now the reason I'm looking at these as just corrective swing points right now is because of what the 30-year did this week, which we'll get into at the end of this. So The British pound, we have a bullish engulfing line that was triggered on Monday as well. We have an upside target of $1.4074. Now remember, these are targets now that are in the trade is already in place. So anyone that's listening to this, if you didn't get in on Monday afternoon, evening, or sometime yesterday trying to lowball those price points or highball them, the trade's already going on. So if you're already long or short and going with these signals that I'm giving you, that's great. If don't try and reverse and follow these, just as a reminder. So So those are the two major players in the index. Now, the interesting thing is that, remember last week I said how the crude trade is off the table. We're looking more at more free-flowing markets again. U.S. dollar, Japanese yen is proving that. The dollar's selling off versus the big currencies. What's happening to the U.S. dollar yen? It's rallying. Now, do I have a buy signal? No, but I still do have an upside target of 112.5 if this continues to go with the bearish correction in the dollar with these other currencies, especially since gold on Monday had a bullish engulfing line buy signal. Now, that is, like I said, this is also, I'm looking at it as a bullish correction now in the gold market. So if these waves are just in that form and these are only corrective moves, we'll see a dollar bull come raging back. And you mentioned the whole Russia thing just before I came on.
Yes.
That could be something that could trigger a buying rally. And this will make sense when I get to the bonds in a couple minutes. So then we have Australian dollar, New Zealand dollar. No signals there, but they have bounced. So I got a target for the Aussie of 76.83, 77.32, somewhere in that band is an upside correction. New Zealand dollar, US dollar, I have 71.19 up to 71.65 as a correction area. Now, this would help support that if we are in a bearish correction with the dollar, these currencies should most likely continue up to these areas before they start to either stall or accelerate, meaning that we truly do have a dollar bear, okay? Then we have the US dollar Canada. Interestingly enough, just like these other currencies, it started to explode to the upside before all the other ones followed through last week. And remember, the U.S. dollar Canada has been getting beaten up for 16 months now, So it rounded out a bottom. Now markets go out like they come in. So we're seeing the sell-off from Monday into today in all these markets and these reversals. That's just a pullback coming back. It's a reflection of momentum. We had so much momentum that came in from the Fed day on Wednesday into Friday's close that it's natural to have this pullback like we're having, okay? Now, interestingly enough, when you look at these currencies, when you look at the bond market, now all this happened on Monday in all these markets. Now, remember, the bond market had a huge rally. I was listening to you talk about the 10-year. So the 10-year and the 30-year both rallied, and they had ranges that were huge without any real Fed. There was no Fed action. There was no market action. There was nothing to justify it. Now, the bonds is the first market I started trading back in 1990. For the bonds to have a high of 163 even basically and had a low of 159 something, you don't have $3 ranges in the bonds, especially spiking a higher move high, pushing this trend higher, because the bonds and the interest rates have been going lower for the past month and a half, 2 months, with a slightly higher move high, higher move low trend. Now you have an exacerbated spike high where if the bonds have a sell signal, which is what I have now from Monday, how can the dollar be a bear then? You know what I'm saying? Like, if rates are going to start going higher and there's going to be a sell-off in the bonds, I mean, we basically had a sell-off on the bonds on Monday. We went all the way up to 163, and we're trading right now around 159.25. That's a $3 sell-off in my mind, So, I mean, even though you're in a bull trend. So I think these are things to be mindful of right now. If the 10-year and 30-year start to really sell off in a big way, I think that you're going to see the dollar reverse gears, and you'll see the euro and the pound and all these other ones run out of gas as well.
Yeah, I had to do a double take looking at the note in the bond market on Monday when I woke up. To see where it had been overnight, because my head said, wait a second, was that a full point, especially on the 10-year, because I just follow it more so.
Right.
And I said, yeah, it was a full point, man. Made it at about midnight on Sunday evening, 1:30, 2:30, and by the time we were all awake, we backed that up. By about 9 o'clock, you were back to 132 almost. Crazy.
And this is not computer action. This is something, a lot of people, the bulk of trading is computerized. However, you do not have major markets with these kinds of volumes overnight when the markets just start trading on a Sunday night going into Monday morning without big money actually being involved. This is not algos kicking in causing this stuff. This is not some system or whatever, or some kind of mathematical model that's causing this.
I was just going to add, especially because of how dramatic the yields. I think the yield when you got up there to 132.30, you were talking about 1.35%. That by the end of the day, you were back to 1.5%.
Exactly.
staggering implications when you talk about the 10-year, how it's used, when you talk about 15 basis points just from midnight until 8, 9 in the morning on Monday morning to start the trading week. Well, Teddy, man, that was quite a conversation. We appreciate the education as always, man. And folks, you can reach Teddy every trading day, forex-trading-unlock.com. I love the way you break it down and use the market. Now, we got to finish it up. I know you're thinking that oil isn't the driver as much anymore. Okay. But what are your feelings on oil as we continue on a daily basis?
$100 is coming. Absolutely. I am not. My whole take on oil is that where it was really that commodity trend was helping to fuel like the U.S. dollar Canada trade, the U.S. dollar yen trade, things like that. It's still in play, but it has not the significance now because, see, at these levels, oil is going to affect the economy now. Now it's no longer just inflation. Now for everybody, we're talking about producer price index, transportation stocks, things like that will start to really get hit. And I can end on a couple of signals for your cryptos too. Potential bullish engulfing line in the ETH it's happening right now today, so we could have a little bounce in the cryptos over the next couple of days if they settle where they're at right now today. This morning.
Ether, that's one with the future in my opinion as well, let alone Doge. Teddy, man, thanks so much for the update. Awesome. We'll talk to you next week, pal. Thanks, man.
Take care,
we'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're going to start off this segment with a gold contract catching a little bit of a bid here. The gold market must know that it's a special week at TFNN. My dad, Tom O'Brien, out with his 1,000th issue of the Gold Report. Congrats to him. Can't understate, folks. I do a newsletter myself. I put out weekly updates as the Gold Report does, but something you have to consider, folks, is that once you do it, it's something you're always thinking about, no matter if you take vacations or not. Those updates are coming out, and remarkable. My dad's been doing it for almost 20 years in the gold market. Remarkable success over that time. $252 gold was trading at, I believe, when he started that Gold Report back 20 years ago. Gold catching a little bit of a bid right now, up about $17, up 1% at $17.94. If you head on over to the front page of TFNN.com, folks, we got 2 sales going on to commemorate the 1,000th issue. We got a Tiger Dollar sale. If you're new to TFNN, Tiger Dollars can be used for any newsletter, any service we offer. They never expire. They're transferable as well. If you have friends, family that you have to transfer them to, right now you can get a 20, 30, or even a 40% bonus. Usually it's a 10, 15, or 20. We've doubled the bonuses that you can get purchasing Tiger Dollars. That sale runs through July 4th weekend. Current subscribers out there, great way to add savings to any subscription that you already have. You buy your Tiger Dollars, you apply them to your account. They're automatically used for all future transactions until they reach 0 once you apply them to your account. And then, of course, we got a Gold Report. He's going up. Inflation's here, folks. Gold Report pricing going up July 4th weekend after that as well. Right now, you can lock in pricing on the Gold Report. Great time to sign up. If you haven't signed up and tried it out yet, you'd be locking in the pricing, folks. So whether it's the 1 month, the 6 month, or the yearly, I encourage you, if you're thinking about staying on, think about signing up for the 6 month or the year, because what happens is you still get a 30-day money-back guarantee, okay? So what you can really do is you can buy your Tiger Dollars, okay? You can go sign up for the Gold Report and lock in that pricing, folks. And if you're unhappy, you can still get those Tiger Dollars refunded to your account to use for whatever other service that you'd like to, okay? It's a great deal. They're both going through July 4th. And if you get a chance, congratulate my dad out there for 1,000 issues of the Gold Report. And he's had some amazing success over that time, folks. So I encourage you to check it out. Gold up 1% as we end the program at $17.95. We got the S&Ps up by 3, NASDAQ up by 35. Stay tuned, folks. We got Basil Chapman up next. Live programming all day at TFNN. Come right back.